Good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the NASDAQ 100, being recorded on Saturday, November the 15th at 11:28 a.m. Pacific Standard Time. I'm going to begin on the NDX, the cash market, and actually want to start talking about many things this morning that are affecting our trading, that how I'm looking at the market, and what actually my Elliott Wave count is and has been, and why. Um, Primarily here in the cash market, I use Elliott Wave, and I'm starting on the weekly 5-year chart because the daily, excuse me, not the daily, the maximum monthly is not going to show that much and kind of gets a little bit cluttered, but I'll go here. So this is the monthly chart. You can see that what I'm counting and what I'm finishing, because the NASDAQ 100 came online, began trading in 1985. So not that much data available in the NASDAQ 100, but I have everything that is available, and it goes back to 1985. And outside of that, I had to flip over and go to the NASDAQ Composite, which has been in existence much longer. But I trade the NASDAQ 100. So here you have it. So cash market is finishing up a primary third wave. And so you can see from the start, I have primary wave 1, primary wave 2. We're in a primary third wave. It'll consist of 5 waves of intermediate degree, of which 1, 2, 3, and 4 are complete. I'm in intermediate wave 5. And now I can take it down. We're going to go to that 5-year weekly. And there's intermediate wave 3, intermediate wave 4. So we're in intermediate wave 5 of primary wave 3. So we're getting close. And then within intermediate 5, we have 5 waves of minor degree, of which 1, 2, 3, and 4 are complete. We're in minor wave 5. And within minor wave 5, we have, and I can take this now down to the daily, in minor wave 5, we have 5 waves of minute degree, of which 1, 2, 3, and 4 are complete. So again, this is not a deliberate pattern, but it is. But we're continuing. Now you can see that within all of these fifth waves moving up, we're now down to the very smaller, where we're in minute wave 5. All right, so within this minor fifth wave, we have 1, 2, 3, and 4 of a minute degree, leaving only minute wave 5. Get this, minute wave 5. And within that, I believe we're now again in minuet wave 5. So we're down to the finish line. In terms of time, we're down to the finish line. And whether it finishes now or finishes in January, I think we're down to the finish line. And this all wraps up, and we go in to a longer term corrective pattern, which is why I have things marked like that big yellow box. And then one greater, I got to go up to the 5-year, is the green box. Now, we would be in a fourth wave correction. It would be primary fourth wave. And where would I expect that primary fourth wave to come into? The fourth wave of one lesser degree, and that's the fourth of intermediate, and that's why this box is green. Primary wave 4 should find its low and complete within this box. Now, from where we are, we're trading at 26,000, I think, or 25,000. And this would be expected and possibly bring it back to 10,200. So it's just a substantial drop. It's a substantial drop from the levels that we're at, but you have to think and put into your mind, we're just correcting the last 3 years. I mean, granted, more is into it, but we're coming back to within the price territory of an additional correction, which took us to the October 2022 lows. And I'm thinking that's where we can come back to again, run up one more time, make it glorious all the way up, make all new highs years from now, not just next month or 2 months or 3 months from now. This correction, it took us 3 years to get up to this level. Correction, you're looking at least 1.5, 2, 3, 4, maybe even longer to come back down. And because of the size of it and the size of what I was looking for in the additional markets, this is going to work out better in the NASDAQ in terms of the depth. There are other things. I can go back out to that monthly to show you. Again, just speaking of in terms of, we're not there, but we're very close. If we're looking for this correction, the market tends to, now this whether it's Elliott's intent or just the way the markets operate. Markets tend to find their support. If we're coming back down, let me see if I can just kind of bring this up a little bit. It's a little bit more difficult, but we start to follow the fours. And you can start all the way from that minuet degree. So minuet, then leading out to the minute, then leading out to the minor, leading out to the intermediate, leading out to the primary. In this case, we're only going back to the intermediate because we're only in a primary four. We're going to be in a primary four. So we're looking at how can this all fill in coming down. It's, again, bringing it in a little bit. We look at the fours. There's a fourth, there's a fourth, there's an internal fourth. It will likely provide some support, but just on the way down. So if we're starting at the smallest degree, you go minuet, minute, minor, intermediate. So you can see, you follow the fours, and you can see that the largest bulk of this is going to happen once we break below this level. So down to that level, yeah, but once we break that, it's a larger drop. So we have smaller ones to begin. Small rally, down. So you can start to see where you're going to get 1, 2s, and 3s, or A, Bs, and Cs. So you can start to look to see what this is all going to look like. Now, what can affect it? Well, there's so many things that can affect what the market is going to do. So the other thing that I'm really trying to adapt to and stick to is that it no longer becomes a decision process of who's bearish, who's bullish, other than just what the words in terms of market trading, what they imply. If you're bearish, you're more of a seller. If you're bullish, you're more of a buyer. So we can leave it at that. But when we're trading, it's not necessarily that someone's taking a bearish position on the stock or anything else. It is then coming down to the math. It comes down to the numbers that are involved in taking a trade. And if you can stick to the mathematics of trading and the mathematics of the position, then you're using other internal math, such as what gamma levels, delta levels, what volatility is, what happens when volatility goes in one direction or the other, what happens to the price of whatever you're trading. So it's all math. And then we're also including probabilities, and probabilities are nothing more than mathematical equations. What is the probability? What percentage it would be the probability? So again, speaking of that, the algorithms continue to suggest that there's a higher probability of the markets finishing this year at all-time highs. Now, whether they're going to finish this year in the second week of December or at the end of December, or we do one and then we decline and then rally that last week, who knows? Algorithms can be very specific in that manner, but right now, I'm more looking for where this top is going to come in. So again, looking for that top, counting all the way back out. So this would be how I'm going to be looking at it when it is in. And because the first question I get, let's say this does go to 27,000. Let's say it goes to the top levels, 27,000. First of all, what's going to drive it? They're going to give you a million reasons. And all are valid, to be honest, because it's just how the price is going to get there. And if that's what's going to drive it, you look at the percentage. You do the math. Yes, it's possible. If it happened, I'm going to follow it because it will continue to follow Elliott. So coming down, because what I want to talk about is this triangle pattern. Now, I don't necessarily even on the daily. I want to come down to this one. And this is because we're down to that minute wave 5. And that's basically what we're in, folks. We're in minute wave 5 of minor 5. Of intermediate 5 of primary 3. And within this minute wave 5, it is forming an ending fifth wave diagonal triangle. And it's expanding. And it follows all the rules, and it doesn't break any rules. Even with Friday's tagging lower, it doesn't break the rules. It didn't create a new low. Watch, see my white line? I'm moving it. I'm going to put it right at that low. See where it is? It's not below the low of wave 2. It doesn't go below that level. So what appears is like, oh, it broke it, so that just changes the whole count. It didn't. It's very, very, very small, but it does have a little bit of an upward turn to this trend line. That keeps everything in place. Does that mean we're down to the wire? It really does. And that is a gigantic four against a two and against the entire move. But I'm not breaking any rules. So I'm going to have to not necessarily trust the pattern, but I do have to trust the pattern. But that the fact that the market will follow through and come to the upside. And now, of course, my brain wants to go, well, what's going to create that? Well, there are two things that one thing that right off the top of my head that could create it, and there's several things that could not. So that's why right now I want to go over what my preferred count, which is still that we're gonna rise up before we flip and go back down. So where one side will play out and the other side will then take over. So because both are sitting, both are waiting, both are in position that they could do that. So the preferred count right now is that we are still within this now minuet wave 5, which is just beginning not from here, but from the low on Friday. So I also want to talk about the expiration. I want to talk about what's involved and how much money kind of flows back and forth and why that's actually a healthy thing for us in terms of trading. But the fact that that much money is still at play, and that's what can cause these larger moves because of where we are. We're up in all-time high territory. So there's a lot of things that kind of go in, if you just think about it, that have to happen in order to keep prices up here. So with that, it becomes a question of what's fair value, what's overvalued, what's undervalued. And I think as long as we have people running models and numbers, those numbers are always going to come out to support what we're doing. So the thing we have to remember is like, well, what has to happen in order for that to remain constant? Well, that means those companies have to stay in business. They have to continue to produce. Economies have to continue to run. So again, we can look at each one individually and say, well, what could be the catalyst? There are many out there. We're suggesting that corrections are needed in particular areas of economies, of the market, and what's going to survive, what won't. I don't know all of those answers, but I do know how to do the math, and you can look at the probabilities of what are possible and what isn't. And so again, this is now back to almost a 50-50 level, but I think the reasons why are a little bit different. So let's talk Elliott just a little bit. If we look at my work on a long-term basis, continues to show that the market did not top there. And that, yes, there are some that are using that point, this all-time high, as the completion point all the way up to those higher degrees. So in my case, it would be up to a primary third wave completing. But I don't think that that's possible because to put the 5 here would constitute a very small fifth wave, and that would be it right there. Now here's the other side of the story, folks. It's like I got a gap, and a gap. Now, if you're a gap trader, that's the first, that's the second, and that's exhaustion. And tell you the truth, look at what? Does it look exhausted? Yes, it did. It did that, and then it just kept going. Yep, these little spikes due onto some news, but they didn't work and they didn't last, obviously. Now, what's here on the downside? Gap 1, gap 2. I don't know, gap 1, gap 2. We don't have a third right there. So weird pattern. Now, if I'm putting the 5 here, this is being counted as 5 waves down. This is where I start to have a problem because I'm looking at this. And if you remember when we were there and we were trying to determine, is it 5? Is it this? I kept saying it can't be a 5 because there's too much overlap. And what I meant by that is this, because you're going to have to count this as 1 because it is a nice little 5. That is an ABC. And then I got 1, 2, 3, 4, 5. So it's a 1, 2, 3. Okay, you can go with that, possibly, until you get here. Notice, see where my white line is there? There. You see how it overlaps? I even took it down, and let's look at the line chart, which takes a lot of the fluff away. And that would be 1, 2, 3, 4, 5. That'd be in there, and it would be right there. And you see again, it overlaps. So no matter which chart I'm looking at, the prices overlap. That means wave 4 overlapped wave 1. That's a rule that under Elliott, I've learned you don't break it. When you do, eventually your count is going to be proven wrong. And that's not necessarily a bad thing. I don't want to use that negative term, but what I would say is I don't allow it because it keeps open your potential and the probability that the market's still going to go up when your other numbers are suggesting it. So the probability numbers remain pretty strong that we were going to go up. What they're not including, can it happen in a single day? From here, I would be like pretty wild if we did. But I think that we could have a couple of up 500 days in the NASDAQ. We certainly have seen it to the downside. Why not to the upside? Because it's going to get thin. It's going to get thin because what will happen, you see what happens, it's like for trading, the market moves so quickly that if you take a short position, you're down so much money, you get closed, you get a margin call, whatever the situation is. And then you're forced out. Being correct, you could be forced out. So in other words, you short it because it's going to go down. And you get blown out before it does. That hurts, by the way. So again, here we are. Preferred. A, B, C, the 4. It doesn't break any rules. It did not go below that low. You can see again that my white line. It did not break that low. It's a very slight angle to show the expanding, but it's a huge move. For a 4th, it's huge. When I'm taking it into the context of this being 5 waves up, it's gigantic. But it didn't break a rule. Now, leaving that as such, that would suggest we go up. Here are the fib levels for a minuet 5th wave. 100, that's just going to be a pause, folks, nothing more. If it's truly going to go up, that's not going to stop it. It's 25,269. It takes a pause, looks around, goes against the moving average, whatever, but it continues. 1.618 at 25,726, not going to finish it unless it's a failure. I'm going to jump over to something else. But I don't think in this context that failure wouldn't happen here. The failure could have happened here. Because this, in my view, is 5 down, complete with 2 gaps. So it's very interesting to me. But anyway, that could be 5 down. That would be a wave 1, and this would be a wave 2, and your next step would be this. But that's under the alternate. Preferred continues to suggest we go higher. Where can we find resistance? Well, here's the fibs for the minute 5th wave. 0.764, okay, we haven't reached it. Could it stop it? Yeah, because we're above 168. We're at new all-time highs, and we're close to the next level up on the minuet level. So we could hit 26,276 or this little area and be done. So that would be wave 5 in, done. Or we punch through and we can go to minute 5 being 100% of minute wave 1 at 26,920. What do we have above that? Well, we got 4236 for the minuet. Does that suggest if it breaks there, it should go there? No, it's just giving you the next level. It can go here, it can go here, it can go here. And still finish all the way up. So these are just guides. These are just there because they're showing you the numbers, the percentages of what happens if it breaks to that. If we take it down another level, right? That's the minute. This is the minuet. This one is made. This is the important one. And once we start filling the gap, what needs to happen to finish that 5th wave and this 5th wave, then we're fine. Then everything finishes all the way up. That's why these are important. That minor, it's already gone past 100, 1.618, 2.618, 4.326, and now it's up. The next level is 685.4. It's pretty high. But still, so what happens now, as we go up, if we finish here, we're finishing minuet, minute, minor, intermediate. It's all finishing ahead along in conjunction wherever this fifth wave ends, where this fifth wave ends. So we're looking for minimums there. That would be our minimum level. And it works for the minute as well. Now, most common in minute is here. So if we got up to this level, well, yeah, that's pretty close. Coming in between, it works. So you see how I can put that all together, do the math. Now, that's in the NDX. Let's take a look at the alternate. The alternate suggests that we have everything in place. The 4 stays here. And this turns into the 5. And it fails. Now, is that possible? Yes. What's the probability? I don't think it had. Of course, it's going to come in a little bit less probability. But it is one way of concluding that that high was the high, but the wave pattern ended here. So the next wave down starts off at this level, not this level. This does not, in my view, count as 5 down. It counts as an ABC. So I'd put that 4 back there, and I'd mark it as such, A, B, C. Put the 4 there. And this is wave 1, A, B, or maybe wave 1 came up to here because it's a slight high above that. Or it's 1, 2, and then 1, 2, 3, 4, 5. So that's wave 1. ABC wave 2, bam. And that's going to be your sign, folks. So even if we're just doing this, you can run fibs from there to there to there. And now you're getting that C wave. If it is going to have another leg up and it's going to be stronger, well, there's your fibs. And this is where you're looking for it to come in. That wave C would be equal to wave A, and that's at 25,658. Now, wave 2 can't come that high because then you're going over the top of wave 1 to complete wave 2. So it can't happen. So it also would decline that one and push it into the preferred if it got to there. And it would be 1, 2, and a 3. So, but if it gets up to, let's say, here or here and turns and then comes back down below these lows, then it's in 1, ABC 2. That's just 1, 2, and we're dropping in a third. And that's going to be signified, or that's going to be, you're going to know, because it's not going to pause here. It's not going to wait and then continue to rally. It's going to come down, break it, come down, break it, come down, break it. It's because it's what's next, that third wave, the most powerful. The longest and the strongest out of a 5-wave sequence is the third wave. And then if it's going to start, that's what I'm looking for. And to get below that quickly. That's going to be the other side. That's the alternate. The 4 would be here, the 5 would be here, and a failure. So that remains the same, keeps that intact as an ABC, not breaking any rules. There's no set rules for where a 5th wave can fail from. And if we take it in the context of this chart, well, you can't even see it. If you put it in this chart, that failure is not all that huge in terms of this. And one more in terms of, take it out even further, in terms of this. Because we're actually, that's the intermediate 5th wave that we're finishing. And on top of that comes primary 3. So the failure there is dwarfed by the gain. Even from here, it's dwarfed by the gain. A failure of 50 some odd dollars or something versus right here, this 4th wave to the high is 10,000 points. So yeah, it's not going to really affect much of anything. That can the 5th wave fail here? Yeah, it can. Am I looking for that? No, it's not first. That's why it's an alternate. All right, so that stays in place. Now, the other thing that's kind of important is to understand what was really motivating here. What was motivating here? Yeah, I think we had some earnings reports. We had some other things, but you see how it got forgotten? So it's momentary. But what was consistent here to here? Options expiration. Okay, this is a Friday, and this is a Friday, 1 week apart. So again, we're moving into the final monthly, which is November. Then we go into definitely the end of the year mode. But we're building up into, and I think we're seeing some of that happen now. So I wonder how much is left, or again, what if this is how it's going to be moving forward. That's really my purpose, at least through next Friday. There were things that got rolled out to November, and maybe does that where it switches and we go see, because in my mind, folks, when I'm looking at gamma and I'm looking at delta and I'm looking at options trade, you go to a little bit different type of a mindset. And it isn't about being bullish or bearish. It's about volatility. It's about gamma. It's about what happens to that position and the movement of the underlying, not so much at what can move the underlying, because there's enough of that out there. The fact that the options are trading and the people that are doing those trades, called dealers, they're hedging every single one of those options that they're buying or selling. They're hedging them, and they're the ones making the market. And if you go and you look and see that 150,000 options are traded or 250,000 options are traded, there's just a bunch of dealers. That's a plenty that goes around that they have to hedge. And you have to understand that if are we then in a risk on or risk off trading atmosphere? So when you're trading options, it's like risk on or risk off, because it's going to determine what's going to trade and what the hedge is. So, in a risk on atmosphere, that's buying, risk on buying. You're buying volatility, you're buying premium. Risk off, you're getting out of it. And you're stepping in front because the train is going in the other direction. So risk off is selling. So if you can get those are the actions. And so when you start to break like a volatility trigger, that's your signal giver. Your signal giver is to whether is it going up or is it going to, what is the bias is going to be to the buy side, or is the bias going to be to the sell side? So as a dealer, your bias may be to the sell side because they're buying calls because they're selling volatility. So they're selling the volatility via the VIX, which will decline as the market goes up, right? Because less fear that we're going to go down, less fear that something bad, everything's rosy. So, volatility comes down, option prices go up, stock prices go up. Why? Because a dealer who sells the option, sells the call option, hedges it by buying the stock. So again, these are simple things that if you just keep in mind, you're going to get an idea. Now we come into expiration, and dealers have put on positions. And so and if there's been a lot of movement, which there has been between the 2 weeks, look, we came down and we rushed all the way back up, and then we came back down. And then that only started what they needed to get done by Friday. So they did part of it there and then here. And all they're doing is changing all of that. See that gap? That's not making you feel very good if you're sitting waiting or if you need to get the hedges. So again, what's happening in the options market does have an effect on what's happening in the underlying, obviously, because the companies that are in this underlying are affected by how things trade. And it has really, yes, you can call it bullish or bearish simply because of the action that the market is going. Market going down, that's bearish. Market going up, that's bullish. Those are just the terms we use. Now, what makes someone bullish or bearish a lot of the times is founded reason in terms of analysis, in terms of ability to earn, and just forecasts. But again, what are we going on? Future and past. So a lot changes in the now. And so to have that picture outside of the now is a little bit more difficult. So yes, I carry a big picture, but I'm also just looking at what's happening day to day and how it all needs to fit together. So again, doing the math, the Elliott math, the Fibonacci math, the gamma math, what those effects are going to be and how they affect trade and price. So again, I'm telling you this now, again, because this was all options related. It was an expiration related thing where they had to go monetize one side or both sides, you know, and then they turn around and had to get the choice of doing it again because the market always does these immediate recovers. We have these strong downclines. Everything gets monetized and reversed, and then it goes up. And those same dealers are making money in both directions. This is like huge money making day for a large dealer. I'm just going to say it. It's true. And if you just do the math, keep the emotions out, and just trade, I can't emphasize that enough. The minute we go about, oh, is the world falling apart? Is the market going to continue to go down? Is the market going to go up? If you get caught up in that, you've missed the move. Algorithms just do. And it's not that somebody suddenly turned bearish. It's that they're running it because, and they're having to do the selling because of a particular level that got broken, got sold through, that ignites the next round. So in other words, it's like when we break a call, when we break a large gamma position, there are options behind it that are affected, and a P&L is affected to whoever holds that position in a negative way if we're going down. So think about what could hurt you if a market's going to drop. Well, number one, if you're long calls, okay, you're going to lose a lot of money. But if you're short puts and the market goes down, you're going to lose a lot of money. If you happen to have both positions on, you're screwed. So, and sorry, little humor. In any case, getting out of these positions and we come into expiration gets us a lot of what we see. And trading it becomes very interesting because you can continue. I mean, even on a futures basis, just futures trading. Again, this is the cash. So let me finish there and go over, and you can see in the futures market, it trades a lot more. So again, let me just wrap up here. My feeling is that yes, we're still within this minuet fifth wave going up. The probability levels still remain above 50% that we're likely to be up here by December. I would think at least to new all-time highs, and that's 26,275-ish and above. Those still remain good, so I'm looking for that fifth, but I am looking for the completion point, and I think initially we will get a hard sell. And it might come with another expiration. As we get closer to year end, those expirations are more important because, again, it's what do you want to keep, what do you want to take out, and what do you want to put on the books? Because, again, these are all put into reports that this is what we had, this was our position, and blah, blah. So year end stuff. The preferred count remains to the upside. The alternate does suggest that the market failed, so we're already done with primary wave 3. Some other might put it in a different level. I would put it here, and I explained why. And so that we're starting on the primary fourth wave. Okay, so go over. Let's look at the futures market, which is going to be exactly the same, except the levels are, of course, are a little bit different, and a lot of the gaps don't happen because these trade. So again, you can see the completion points in these different levels. And again, here, where if I'm trying to count this as 5, declaring that that was the high, I can't because of the overlap. And I mentioned it when it was happening, which is why I kept it here. Now, I called this an ABC, and I did put the 4 there, and I kept it there until it came back down. Then I realized it's like, no, wait a minute. It did not break. Yep, it broke below that, just moved the 4 over because it didn't break above there. So that's the decision that I made. I just moved the 4 over. I shouldn't say just, because it was a lot of thought and relabeling and making sure that everything was in line to do so. Most importantly, if this did not break that, because that was the factor, if it had come down and broke below the sorry, I just noticed that that's still hanging out there. If it broke below 24,410, it would have annihilated the count and would have forced that high to likely be there. Because again, I would continue to use the 4 there. This I can count as an ABC up. It would be a 5 because remember it's a triangle, and it would be a failure. And again, a big failure, well, what? 25.8, 26.4, yeah, 600-700 points. That's that. Nothing when you think about where it came from. Because it's finishing the rally phase that began in October of 2022. So from 16,000 to 26,000. Pretty big rally. It failed by 600 points. Okay. It's a good ratio. In any case, that would be the alternate. Now, again, filling in these gaps, these are very, very tradable. And following it closely, trying to keep an eye on exactly when volatility triggers break, when large gamma 1 or large gamma levels break, call walls, put walls, hedge walls. There are a lot of different terminology that are used. Understand what it means. And this data is available through a lot of people, a lot of vendors, and you can put it on your own computer. So they're just important, whether you're an options trader, whether you're a futures trader, they come into play. And I don't want to go into it because it's really the coaching part. It's like where your mindset becomes very important because you have to follow the market and you have to react and you have to know what's it doing and how hard is it doing it. It's like a lot of times when these, particularly in the NASDAQ, which is the index that I trade, the future that I trade, you could get into something. And again, you're trading through a prop firm. You're trading and what you earn, you get to keep a percentage of. But there are limitations and there are drawdowns. And in the NASDAQ, your drawdown can be met in about a hot minute. And I mean that seriously. It's like I've seen positions where it's like suddenly you go quickly, you're up 152 or 300 or 400 bucks, and the thing turns, and the next thing you're down 500 or 600, and you add that together, that's $1,000 move in a flash. Because it's algorithms and they're moving quickly and they're gang up. When they break particular levels, it forces the trade. That's my point. So here we're supposed to be analyzing. I am going to leave it just exactly the same. Let me go back out to that. 30 days. That I figure we still have, there's the ABC, we're still going up. These levels, 25,368, 25,596, I think they are pauses. 100% might be a little bit stronger, but I do not believe that it completes it unless it's the alternate. The alternate, I'd look for there, possibly there, and that's about as high as I think it should go, right? Because if it's a wave 2, there's wave 1. And it's, by the way, wave 1 of 3, right? We'd have to go, no, wave, not 1 of 3. This would be wave 1 of 1. So it's smaller, and then 2, and we go up and we drop into the third wave. Still would be the larger first wave down. But it's 2 up and 3. So you're dropping in a third. That's what I meant, excuse me. Dropping in a third. So if it's going to happen, I think it gets up to there, and then something comes up and it just starts cutting through this and breaking it. And likely, because I won't have them until Monday, you're going to have revised gamma levels. You're going to have revised levels of where everything is sitting now coming out of that expiration. And also, it's November expiration coming Friday, November the 21st. It is a monthly expiration. Should be big. All right, so that's really about it. I don't need to kind of go too deeply into this anymore. But the cash, everything still stays in line. And even when you do it on the line chart, you can see it's a little bit different. See, down line chart, that tells you that that's kind of the 4, because you see it went a little bit deeper. So on the line chart, I even put a new, so that would be A, B, C. So now it fits extremely clean for the futures market and did not break below that. All right, so that's where I'm going to put this together. And the next update will be on Monday, and I'll have updated gamma levels, and that's also members only.